Hi everyone, this is Don at StockMarketCaddy.com. It's January 24th at about 11 o'clock or so thereabouts. I just wanted to take a moment and stand back from the trees and be able to see the forest, if you will. The last few days we've been doing some technical analysis on some various sectors and markets and giving our impression that we very well may be in a setup for a pullback. But I want to step back from that and look at a chart that we look at every once in a while, not every day by any means. But since today we're making new highs in the S&P, the Dow, and all the sectors, and what's happening is what you would expect to happen at this point. The bulls are saying we're breaking out to new ground. The train is leaving the station. There's tons of money on the sideline. You got to get in this market now, or you're going to be left behind. And the bears are saying no such thing. We're coming back. We're going to go into some kind of a bear market. We have, based on our technical analysis, the belief, the perception, the expectation that we're going to pull back. And then when we pull back, the speed at which we pull back, the volume, will tell us about where the smart money thinks this economy really is going. But this particular chart can afford us a look at the sector analysis. And if we look at each sector, we try to get a gauge on where the stock market thinks the economy is going. All that said, I'm going to be the first person to admit that everything is distorted because of the money printing and the counterfeiting that's going on in DC, and that could be the issue all around. Nobody really trusts it. Are things moving because of the money printing? Let's face it, many of these sectors took off back in March of '09 and there was no demand. So is this taking off now because there's real demand, or is this money printing? This particular chart, I'm going to go through real quickly, tells us, the blue shade tells us what sectors should be doing what in the early bull, middle bull, and the late bull. And what's happening at the top of the market, 4 to 5 months in front of the peak in the economy, and then as we get into the early bear, middle bear, and late bear. Again, we don't know if we're just going to have a mild pullback and it's going to be off to the races and we're in an early stage of a bull, or if we're going to have something that is more substantial. The economists won't tell us until we're into the bear or actually looking back at it, and as traders, investors, that doesn't help. The early stage of a bull, financials should lead in transportations, 5, technology, 7, XLB, capital goods, 6, XLI, 9 and 11. 9 is energy in precious metals, could indicate if they're topping out, could indicate a topping. And then this is the tell, consumer non-cyclicals, and 3, healthcare, which would be XLV and XLP. Money gets really defensive, transitions out of some of these other sectors in here, out of the precious metals, and then the peak. And then as you come down, money gets real defensive into utilities, would be really breaking out. And then at this point down here at the late bear, financials and consumer cyclicals would be picking up. And it's down here that the economists and CNBC will tell you, yeah, we're in a recession. And you're down 10, 15, 20, 25, 30% in the stock market or in your investments. So that's not good. So let's look at the individual sectors and see where we think we might be. I invite you to use this chart, look at your own charts, your own sectors, and make a determination for yourself and let us know what you think. Good luck. Okay, we're going to try to move through these sectors really quick and remembering what we just saw in the chart. This is XLF, the financials. The XLF should be breaking out strongly if this is in fact an early bull phase. The XLF has been in a very shallow uptrend for the last 3 to 4 years. Yes, it has steepened the last few weeks, but she does have resistance, and there are a lot of angry people over here that want to get their money back, otherwise known as overhead resistance. So I can't necessarily make a case that financials are really leading all the other sectors. And everyone wants to say now on all of these sector moves that these moves are on account of the fact that the economy is doing well. Well, we all know that all the sectors took off back here, and we know the economy wasn't doing well because we can look back on it. This was due to money printing. So how much of this little move here is additional more money printing? That's the distortion. That's what makes it tough. Let's look at the IYT, transportations. Okay, transportation, same thing. It has been in a consistent uptrend for the last 4 years. Yeah, it's almost going parabolic here. But is this the last gasp? It's not like it's, the economy should have been taking off back here if transportation was, hadn't been distorted and this wasn't money printing. So I'm not sure that you can make that leap. Now, XLK should be doing really well. And look at XLK. Again, she was in an uptrend. This looks like a head, left shoulder, right shoulder. And with what's going on at Apple, is money coming out of tech? And if it is coming out of tech, where is it going? So let's look at XLB. Building materials. Everyone's telling us how good the housing is. Well, it took off back here in March. We know housing wasn't good then, but that, I guess, was due to the money printing. Okay, we've had a little run up here in the last few weeks, but we got a lot of resistance here, right in here on XLB, and we got all these angry people over here. We're not breaking out to new ground in the XLB. Let's also look at energy. Okay, we've been in this uptrend. We still got a lot of resistance here. Yeah, it's strengthened a little bit, but not huge breakouts here. To our eye, what about gold and precious metals? Let's look at gold. Gold looks like it's topping out. And what do we know from our sector analysis? If gold tops out, that could be the top. Could be a top in the market. Let's look at silver. And got to go get that. Excuse me here. Here's silver. Okay, she's lagging. So where is the money going? Well, let's look at XLP. This is staples. This is breaking out for sure to high ground. That's a defensive sector. And we could look at XLV, another defensive sector. Had this run with everything else, but look at it. It's going. Is the money coming out of tech and going into healthcare because the economy is going to peak out in the next month or two? And then the last tell is utilities. Here's this trend up, and here's a move on utilities. Utilities clears this area here. Money is definitely being parked, and we would be in a recession, and all the economists on CNBC would tell us, yeah, we're in a recession, but the market would have already pulled back, and you would have just committed some money and could be down 10 to 15%. That wouldn't be good. So I would say let's not be the first mouse. The first mouse doesn't get the cheese. Let's be the second one. Let's let this market pull back and see what's real and what isn't. What is this been all money printing? And once it pulls back, if the volumes aren't there and it holds, then maybe it's true. If not, at minimum we can save our money. Let's wait. Let's be the second mouse. Good luck to everyone.